Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade on the back of research and technicals. And on the technical side, we are now joined by Amar Singh, who's the head advisory of Angel One. And on the research side, of course, we have Ant with us. Let's begin with all the stocks that are buzzing away then. We have picked out Britannia for you. In fact, Britannia is a top nifty gainer for today, trading with gains, with the heavy gains today. In fact, up almost 7% now, almost 7% there. It's on the back of a good set of results that have come out for Britannia. The revenue has been in line, PAT also in line, but the margins have given a beat as far as our polls are concerned. Let's look at the results now on a consolidated year-on-year basis. The revenue has seen an uptick of 1% on a year-on-year basis. The profits have, however, taken a beating and was down at 3.5%. The EBITDA was also down 2%, but the margins came in at 19.3% versus 19.9% on a year-on-year basis. Also, according to the Concall, the pricing action taken in key SKUs like Good Day, Marie, Milk Bikkies, and international business growth was robust, led by GCC and the America business. Also, this is likely to drive the top-line growth for this year, is what the company said, and the uptick for election results and monsoon is also expected to be positive. And post-monsoon, they're aiming for a double-digit volume growth for the company, and that's what is really aiding the stock today. And JP Morgan has also come out with a note. They're maintaining a neutral with a target price of 5,260 rupees on Britannia, the top nifty gainer for today.
About Britannia, but let's also listen out from the management itself on the volume growth trajectory and what more that they want to add.
Closely monitoring the commodity situation and assessing what are the actions that we need to take as we go forward. We remain vigilant on the competitive pricing front, and our strategy will be to remain focused on driving market share while sustaining profits. Frankly, we are going to drive top line hard this year. It's tough. The year, how the last year ended will sort of, continue for a few months. But we are hoping that as the monsoons start to come and, the election results come, etc., things will look much better. So we are going to make it, a mission to make sure that we get the top line to grow much faster. I think the volume growth this year, we expect them to be quite solid. Obviously, barring the entry into the year, which is pretty similar to the year that's gone by, and post-election, post-monsoon, I would think that post-election, post-monsoon, we would be aiming towards a double-digit volume growth for sure.
All right, coming to you, Amar, you've picked out the small cap name for us, Rane Madras. Tell us, what are you penciling in on the charts for this one?
I would say if you look at the stock witnessed a significant rally today, and for the last few trading sessions, the stock has been doing quite well. Because if you look at the first week of April, the stock from almost 740 levels is currently trading around 917. But today it has given up all the gains, so we'll have to watch out for, because it made a high of 1023 and currently it's down to 920. And if we go back in time and look at the stock in June of, I would say June quarter of 2018, the stock had made a high of 1050, and today's high is around 1023. So effectively what it means is that the stock is meeting with some resistance around the 1020-1050 zone, so that's going to act as a very strong resistance zone. But any pullback is a buying opportunity for the stock. For any significant major rally, the stock would need to consolidate and trade above the 1050 level. So this is a stock one should definitely keep under one's radar.
Do watch out for Rane Madras, but from the same sector, that is the auto space, do watch out for car trade as well, because car trade technologies is up around 7 to 8% in today's trading session. Just post the earnings, the stock was actually up by 13% as well, and the reason was the earnings. What a stellar numbers that the company has reported this time around, because do remember, if you look at the consolidated earnings of the company, then that has seen quite a jump on a quarter-on-quarter basis, because in Q3 the company did report a loss of around 23 crores, but this time the company has reported a profit of 25 crores. And also there has been a significant significant margin expansion as well. The EBITDA margin now stands at 31% versus 28% in Q3. And other than that, on the management's commentary side as well as some of the other internals, they have given positive commentary and highlights related to the average monthly unique visitors per quarter that is now standing at 40 million, and in that around 93% are from the organic searches. So that's great set of numbers coming in from car trade. Do remember that this stock has been an underperformer in the whole auto space, since their dealing in the business is quite different from the other listed players. But after a good set of numbers, the stock has definitely seen a good reaction in today's trading session.
Right, from the auto space, then Amar, you have picked out Hindustan Motors for us. I'm seeing this, sharp up move coming in the last 1 month, trading with gains of almost 100%. In fact, today also it's locked in the upper circuit of 5%. It is trading at its 52-week high right now. What is the upside you're seeing for this counter?
Yeah, I would say definitely this stock fundamentally a lot of activities happening, and also a lot of changes are being witnessed. That's the reason we are seeing this sort of movement in the stock, because if we go slightly back in time, so in the first, I would say in the second week of February, the stock had made a high of 24, and then it had corrected all the way down towards 15, and then taking out this high, the stock is currently around 42 odd levels. If you ask the structure of the look at the structure of the stock from a long-term perspective, intermediate term perspective, that continues to be very strong, and the momentum is there to stay. Also, what we are seeing, an interesting thing is that over the last I would say roughly around 10 to 12 trading sessions, the volumes have increased significantly in terms of the average daily volumes, in terms of the delivery quantity. So that tells me that definitely a lot of smart money moved into the stock, and the stock is definitely witnessing a rebound of sorts. And if you look at the levels now, the level where the stock has a potential to rally is almost 25-30% from the current level. So or maybe even 40 to 50% towards the 60-62 mark. That's the next zone of resistance for the stock. So this is a stock to watch out for.
To watch out for Hindustan Motors, already a phenomenal run-up in the counter that we have already seen. But let's talk about MRPL then. Ansh, take us to the earnings fine print of this fund.
Right, so the company has reported revenue of 29,190 crore, which is slightly down from previous year by around 0.7% only. But the net profit has slipped down by over 40% from 1,913 crore directly to 1,138 crore. Whereas the EBITDA, it has also come down by 33% from 3,490 crore to around 2,330 crore on year-on-year basis. Whereas if we talk about EBITDA margin, that has also slipped down from almost 12% directly to 8%. Also, if you see the chart, the stock has actually given a breakdown from its 6-session consolidation pattern with volume of over 30%, its average trading volume of last 20 sessions. In addition to that, the stock has also slipped below its 20 DMA.
All right, coming to you, Amar, NHPC is what you have picked out for us. It has already given some very good returns, solid returns over the last 6 months, more than 100% returns. Are you seeing more upside on it, or is it time to book profits?
I would say that if you look at the structure of the stock, that continues to remain very strong, and bulls are firmly in the saddle. Having said that, the stock did witness some correction, because when we witnessed some sell-off happening in the small cap and mid cap, this also stock had corrected from almost 115 levels in the second week of February to almost 73 levels, and the stock is again back to 102 odd levels. And if you look at the stock has had a recent breakout above the 95 mark, and also what we are witnessing is that volumes and delivery quantity, that's been increasing over the last 4 to 5 trading sessions, which bodes well for the stock. So having said that, the stock has the potential to rally towards its all-time highs, which is around 15, so around 8 to 10% rally we could witness in the stock. Taking out the 115-120 zone, then the stock would witness a major rally once again. Otherwise, the stock would go in for consolidation, but the overall trend for the stock remains positive. So any pullback is a buying opportunity in the stock. Support, very strong support, comes around 94-95 levels.
All right, moving on to the other stock that was in focus today is IDBI Bank. In fact, in the morning it was trading with gains of over over 4%, has cooled off those gains and is now trading with cuts of 0.2%. It is on the back of the earnings that it came out for the lender. In fact, they reported a 44% rise in March quarter profits. The net profit climbed to 1,628 crores in the last quarter as provisions fell 58%. The NII climbed 12% to 3,680 crores in quarter 4 as against 3,280 crores on a year-on-year basis. The ROA, or the return on assets, also climbed at 39 basis points to 1.82% in quarter 4. The NIMs, however, fell 10 basis points to 4.9%. The asset quality, however, was pretty stable during the quarter, with gross NPA slipping to 16 basis points on a sequential basis to 4.5%, and net NPA remained unchanged at 0.3% on a quarter-on-quarter basis. Now, the bank's board also recommended a dividend of 1.5 rupees per equity share, and that's the word for IDBI Bank. It was trading with gains of 4%, has now cooled off in trade.
Right, that's about IDBI Bank, but let's shift focus to one of the other stocks from the same sector, that is the financial space, and that is M&M Finance, down about 1.5% in today's trading session. While we look at the numbers this time around, the NII was a beat, PPOP was a beat, but if we look at the profit, that was a miss, and that was ailed by the fraud that the company reported some time back, and since then we are seeing the stock under tremendous pressure, and even the NINs were a slight miss this time around. If we talk about the profit figure, that's down about 10%. We were expecting the profit close to 730 crores, but the company did report 619 crores in the bottom line. Some of the other highlights do suggest that the company's disbursement for the used vehicle segment was up around 18%. They have unveiled plan to enter the insurance sector as well, but nothing is giving them quite much of optimism when it comes to the investors' interest. And also on the intimation of the fraud, the company did mention that the fraud has impacted Q4 profit to the extent of 136 crores overall, and the management said that the earlier fraud amount won't exceed 150 crores, so somewhat around in that range. And the company has employed a restoration team as well, and the company has identified initiatives to further strengthen the controls around the document review. So that's the commentary coming in from M&M Financials, down in trade as of now.
All right, moving on to you, Ansh. You picked out Inox Green for us. This stock is locked in lower circuit right now. It's on the back of the results. Tell us what the results look like.
That's right. Actually, the company has reported revenue of 52 crore, which is down by around 7.7% from 57 crore. But if you talk about profit, then it has recovered from a loss of around 0.57 crore to 21 crore, which is a positive sign. Also, EBITDA has seen an uptick of 87% from 6 crore to around 11.5 crore. Also, the EBITDA margin has seen a good improvement from almost 11% to 22%. But on chart, yes, the stock is not reacting positively and it has touched lower circuit and the prices have frozen there.
Alright, Inox Green Energy locked at a lower circuit, but Amar, take us through how you're looking at the charts of Marico. All these FMCG counters are still holding on to itself, and we are seeing phenomenal gains on Britannia. But apart from Britannia, how are you looking at Marico right now?
Marico, if you look at, honestly, if you ask me, the stock really hasn't performed much, or it has disappointed its investors. Having said that, what we are witnessing over the last few weeks is that the stock seems to have moved out of a consolidation zone, because earlier the stock was trading in a very narrow zone somewhere around 480 and on the upside around 520. So now we are seeing that the stock is taking out that level. So the current level is very crucial and important for it. So anywhere between 520, 530, that's a zone of resistance. Taking that out, the stock has the potential to rally towards the 560 mark in a short-term period. And also the structure of the chart is changing on the intermediate-term basis. The long-term still remains, I would say, sideways, but the intermediate-term trend, the short-term trend, that is displaying some signs of strength. And also what we are witnessing over the last few trading sessions is that there is an increase in volume and I would say delivery quantity. So that bodes well for the stock. So the level to watch out for is 530. Sustaining of that level, the stock has the potential to rally towards 560, 565 levels in the short span of time.
All right, moving to you, Ansh. Tattva Chintan is what you've picked out for us. In fact, this stock is also declining in trade. It's trading with cuts of more than 2%. Also an earnings candidate. Take us through the report card for this company.
Yes, that's right. The stock is down over 2% in trade. The company has actually reported revenue of around 98 crore compared to 125 crore, seeing a downtick of over 21%. Also, if we talk about net profit, that has also come down almost from 17 crore to 9.6 crore, which is down by over 43%. EBITDA is also down from 16.2 crore to 15.5 crore, which is down around 4.3%, whereas EBITDA margin has also come down from almost 13%. It's actually gone up from 13% to 15.8%. But if we see on chart, the stock seems to have given a slight breakdown from that 10-session consolidation pattern, and it has touched 2-week low today as well.
Alright, moving on to the other counter that is in focus today, and that's Craftsman Automation. Now, Craftsman Automation that has entered into a definite agreement to acquire the remaining 24% of equity share capital of DR Axion India, and this will be for a consideration of a total of 250 crores. Now, the objective of this acquisition is that it will strengthen the company's presence in the passenger vehicle segment, provide process synergies, and access the customer base of DR AIPL. And on the back of that, Craftsman is in focus today. Right now, it is under selling pressure, trading with cuts of 0.8%.
Alright, then that's about Craftsman Automation. But another counter that has posted good set of numbers, that is Aarti Drugs. Ansh, take us through what's happening with this counter right now.
Right, so the stock is actually down over 1.5% in trade. The revenue which they have reported is 620 crore, which is down from 742 crore, which is almost 16% down from earlier year. If we talk about net profit, this has also come down from 56 crore to 47 crore. So the EBITDA has seen a downtick from 93 crore directly to 85-86 crore. So for those reasons, the stock is in focus and is trading in red today.
Alright, that's about Aarti Drugs. But Amar, another FMCG counter on your radar is HUL. Take us through how you're looking at this counter right now.
So if I look at HUL, what we're seeing is that this is one stock which has again disappointed its investors. But what we are seeing right now is that the stock is bouncing back from very crucial support zones. So 2200 was a crucial support zone, and what we're seeing is that a significant volume and delivery quantity has happened at the lower levels, and the stock has corrected almost from 2700 levels, 2660, 2700 levels first week of January. So the stock has a potential to bounce back from here. So one can look at a buying opportunity in the stock sustaining above the crucial zone, because if you look at the levels to watch out for, 2250, 2260, that's the immediate zone of resistance. Taking that out, then the stock has a potential to rally and maybe reverse its fortunes from here.
That's the take, and another bullish momentum expected on HUL. But let's shift focus to Paytm then, and this counter is also in focus after one of the other exit that has been announced for Paytm, because Bhavesh Gupta is the third in the senior role at Paytm to resign and more papers to put in. That's the reports suggesting, because for the latest update coming in from the company itself, they have informed about the resignation of their COO and President Bhavesh Gupta. And that's according to the filing. Gupta in a letter said that this resignation would be effective at the close of the business hours of 31st May 2024. However, he expressed his intention to continue supporting the company in an advisory capacity within the chief executive's office. Other than that, in his resignation letter, Gupta cited personal reasons for taking a career break and expressed confidence in Paytm's future trajectory and the financial services development over the recent years and how the company can participate in the same. But on the back of this resignation, we are seeing the stock under pressure, and most of the reports are also highlighting that in the times ahead we could see more such senior level resignations from Paytm itself, and that's why it is shaking the investors' confidence as well.
Alright, coming to you, Amar, you've picked out Ajanta Pharma for us. Just on Friday, this stock was soaring away good 14% on the back of stellar Q4 results and the buyback plans. But on the technicals, what are you penciling in for this counter?
Ajanta Pharma, the stock is clearly in a very strong uptrend, and we did witness the stock correct from its all-time highs, and then again, but today has been positive. So this is a stock one can definitely look at, and also what we are seeing is that the stock has earlier was meeting with strong resistance around the 2300, 2320 zone. So now that should act as a very strong support zone for the stock. So this is one stock one can look at. Yes, the recent high, that is last Friday's high, that's going to act as the immediate zone of resistance, 2540, 2540, that was the earlier high. So it could be more for a consolidation, but this is one stock one can look at on buying on any correction.
Look out for buying on any correction when it comes to Ajanta Pharma. But with this, it's time's up in this edition of Market Fatafat. Thank you so much for joining us on the show. Thank you so much, Amar and Aditya earlier, as well as Ansh, for joining us and highlighting all the buzzing counters as of now. And before we, me and Ankita and the entire team who put this show together, bid you goodbye, let's hear out from Rajiv Thakkar, who is the Chief Investment Officer of PPFAS Mutual Fund, where he is circumspect on the new startup listings and the consumption space. Let's listen into his rationale.
I think one space we are circumspect on is the newer listings, which are more startup kind of names, where they were privately owned and they came for listings. And some of them are breaking even, some of them are in small losses. And the whole focus is on revenue growth and going into newer areas. Now, let us say there are 10 such listed businesses. Maybe 2 or 3 of them will do well, but most of the businesses could end up losing money for investors. I don't know which ones will succeed, which ones will fail. But today, you see digital advertising for this 10-minute grocery delivery. There are at least 5-6 players competing for that. And it's not something which is a very, very high margin business, given the relatively low ticket size and the need to have so many people feet on street and things like that. So I'm circumspect on the startup kind of businesses. The other space which is mind-boggling to me is the consumer names. Now, a lot of people keep saying India is the growth area and our GDP growth will be so strong and things like that. But some of the FMCG names and some of the retail names, one is seeing that there are growth challenges. In fact, in some of the FMCG names, growth is very, very similar to developed countries. And we have valuation multiples of 60, 70 and 80 times earnings, which really baffles me.
If you like this video, then like, share and subscribe to ET Now.